Do you have a charity that you intend to bless when you pass away, leaving some of your estate to them? Well, if so, there's a smarter way, there's a wise way to do that. I've got that and more coming up. My name is Mike Bernardo, the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Is there a charity, church, or cause that you intend to leave some money to from your estate when you pass away? I see this from time to time. We see this from time to time, and it's typically written in a certain way that just seems convenient. However, that convenient way or easy way with a little proactive thought to it could actually be done in a better way to improve your overall or your estate's tax situation. Here's the thing. Early in my career, I sort of had to wrestle with the idea of, well, do you make donations to charities, 501c3s, to get a tax benefit, or are you making the donation because you want to support the cause? Well, clearly, you want to support the cause. Guys, and if you think about this, if you haven't thought about this before, your tax benefit, it's always a percentage of the money that you donate. And therefore, the tax benefit's not going to be more than the resources that you originally had at your disposal. So it's got to start with this aim, this goal of helping the end charity. It's a cause you care about. It's part of your religious beliefs and how you want to live that out, that sort of thing. So it's got to start there. And then if it starts there, then I also wrestled with early in my career, well, then do you even care about the tax benefit? Do you just ignore it? Because you're not doing it for that. And the more I thought about it, it was, well, listen, you're a steward. You're in charge of these resources that are entrusted to your care, whether because you have a certain skill set, and you earn a certain amount, or you receive inheritance, whatever. And so if you have a cause that you care about and you're donating to them, and you can do so it's got to start there, but then you're aware of the tax laws and the rules, and you can do so in a more tax efficient way, meaning you actually pay less taxes. That means you're being a good steward. You have less dollars going to Uncle Sam, and you keep more dollars under your stewardship, which again, you could then use to benefit more causes or causes that you care about. And some of you may look and say, well, no, if you pay more tax, then the government has stewardship responsibility over those dollars too. And I would just trust you to be able to steward those dollars better than the government. Okay, and so here's what most financial planners, then the conclusion they've come to, and I would encourage this should be the conclusion that you come to as well. If there's a cause you care about, if for benefiting the church or benefiting a nonprofit, then do that. That's the core. That's the reason. Okay, but be aware of all of the tax planning strategies so that you can do so in the most tax efficient way. Okay, so that's the premise. As we're doing financial planning with folks, if there's a cause that they care about, or they want to benefit the church or something like that when they pass away, typically the convenient way for them to set that up is this is usually brought up by the attorney when the attorney's drafting their will. And so I'll read through the will and I'll look and I'll see $10,000 or $15,000 or $50,000 goes to XYZ church located blah, blah, blah. Or to the pet refuge and the animal shelter, or to such and such hospital, or to such and such cost. It's written in there in the will. And while that's easy to do, it's not the most tax beneficial way to do it. Here's why. Is there a deduction from your estate for making a contribution to a public charity? Yes, there is. There is. But you have a deduction already from your estate, and that is the estate tax exemption. Meaning, if your estate isn't more than $13 million, and I'm paraphrasing, that's approximate amount, double that if you were married and your spouse didn't use any of theirs, then it doesn't matter whether you have a deduction or not. You get a charitable deduction or not. You get that $13 million deduction, and if your estate is smaller than that $13 million, then there really is no tax benefit for donating to that charity. And you might say, that wasn't my intent. I didn't care about that. Understood completely. But here's the scenario, and we see this all the time. A couple owns a house. Let's say the house is worth $400,000. They've got cash in the bank, various accounts, say that's $100,000. And then they've got $350,000 in an IRA, okay? And while they're living, they've got Social Security, maybe they've got some pensions and they're drawing a little bit out of that IRA, but you do all the math and projections, and unless there's a significant change in their expenses, nursing home, that sort of thing, and they haven't planned for that expense, this is more money than they're going to need in their lifetime. So when they pass away, there'll be a house that someone inherits, some cash that someone inherits, and the IRA that someone will inherit. Well, on the IRA, whoever inherits that, they're listed as beneficiaries on the IRA. And when they inherit it, that IRA, if it's not their spouse, that IRA becomes an inherited IRA, and those individuals have to withdraw the entire account within 10 years. And as they draw it out, whether they draw out a little bit or a lot of it, they've got to report that money on their tax return. Okay? So typically how this would work in that scenario, the house and the cash, the bank accounts, would go through the will, and the will says leave 50 grand to the church, and then everything else split up between the kids. And so that's what the attorney would do, and the executor or personal representative would do, nice and easy. That IRA, it would say leave that to the kids. Not the will would say that, but the beneficiaries listed on the IRA would go to each of the kids. The kids would then draw the IRAs out over that 10-year time period, and they'd have to report the income on their tax return. That's normally how it would work. Think about it differently. What if instead of the will stating we want to leave 50 grand to the church, what if on the IRA there was instructions that the church was listed as the beneficiary, and not where all of a sudden instead of getting 50 or giving 50 grand to the church, you leave them the 300. Now, what if they're listed as whatever the percentage is that would equal roughly what you intend to donate to the church? Well, in that case, the house would be sold, the cash would be sold, that would go through probate, and that would go to the kids. They would inherit that tax-free. There's a step up in cost basis. There's no tax with that, with inheriting that. Then the IRA, a chunk would go to the church. And does the church want an IRA? No. As the church withdraw those dollars, do they have to report it as income? No, they're a nonprofit. So they withdraw that 50 grand that they inherited as beneficiary of the IRA, no tax consideration. The remaining amount of the IRA gets split between the two kids. So yes, they have fewer dollars coming in IRA form, but those fewer dollars then would mean fewer dollars that show up as ordinary income and taxable income to them. A little complicated, and again, it's got to start with the desire to, I want to benefit the church, I want to benefit this organization, this nonprofit, okay? It's got to start with that intention and that goal. And then, what's the most tax advantaged way to do that? What makes the most sense? Will you set that up and forget it? Set it up at 45 and that's how it'll be for the rest of your life? No. That's why you got to work. You've got to do comprehensive financial planning, reviewing what your intentions are on an ongoing basis. Will it change every month, every 6 months, every couple of years? No. Every couple of years you should tune into it though, just to make sure nothing's changed. And if you had a goal of donating a certain amount to the church, well, that IRA account is going to fluctuate in value. So another idea is maybe opening up a separate IRA account, throwing 50 grand in there and saying the church is the 100% beneficiary of that account, whatever it grows to. That's an idea as well. You're limited by your own creativity. You've got to understand the rules. You've got to set the accounts up and have the right creativity to do that in a planful tax planning way. Work with your CFP on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K, wisemoneyshow.com. You can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.